Welcome to the Compass, live from Beaver Creek. It's the Friday of the Precious Metal Summit here in Beaver Creek. Sam and I have been around the conference. A little bit different for me this year. With me, as always, is Sam Pelez, President, CEO, and CIO of Olive Resource Capital. And my name is Derek McPherson, and I'm the Executive Chairman. I guess maybe, Sam, to start, we're up here in lovely Beaver Creek, but we actually put out a little bit of news of our own first thing this week. On our August performance. Might be worth mentioning, and then we'll get into what we're seeing here.
Yeah, so it's good news for Olive. We've had the best first half of the year since we've put together this vehicle, and then the months of July and August have also been quite spectacular performance-wise. I like to say it's just because we're very smart, but in reality, it's been a good market. Even the summer, where typically you're never sure about how solid the performance is going to be this year, surprise to the upside, especially in the gold names. We were able to benefit from that with some of our names, and actually some specific cases actually quite outperformed the market itself. So we're very happy with the performance.
Yeah, I think we talked a little bit about at the beginning of the summer that the summer doldrums aren't really the summer doldrums, and that I think August was evidenced by that. It's definitely been an interesting summer. I'm talking to some of our friends that are in investment banking. They're doing a ridiculous number of deals and financings, and so there's definitely interest in the space. And now we're here at Beaver Creek, particularly for gold and silver names. It is called the Precious Metal Summit, and it has been the mood has been very, very buoyant or positive. You sat in a lot of presentations. What did you see? I guess maybe on the mood.
Definitely a lot more excitement. One thing that has quite shocked me is how well capitalized a lot of the juniors are. This is certainly something that we haven't seen for at least a decade, and probably longer than that. We have seen advanced exploration companies, pre-resource, that have been able to raise $20-30 million. That was a dream years ago when you were lucky if you raised 3 or 4 on a really good project. Now there's a lot of money for them to continue exploring and growing those resources and delivering. So I think it's going to be a very busy year from here, say this Precious Metal Summit to the next one next year. I think we're going to see a lot of drill holes, a lot of resource updates, a lot of growth in the industry.
Yeah, I think that's the opportunity. We're almost at the point where financings are a catalyst, because companies are able to do work and move projects ahead, and you can see projects move ahead, which then in principle creates value for the shareholders. I had a very different Beaver Creek experience this year. Normally, historically, when I was an analyst, and then the last couple of years with Olive, I'm taking meetings and listening to presentations. And this year, with West Point, I was giving meetings and giving the same pitch 50 times, and got the opportunity to meet with a lot of investors. And I think the thing that was really interesting for me is there were people here that I didn't know. I've been coming to this conference for a long time. You've been coming to this conference a long time. There are people here that I don't know, that don't recognize, that I haven't seen before. And I think that's also a really good sign for the space, because there's money outside of the little pool of capital that we kind of trade amongst ourselves. We actually have people coming into the space.
Absolutely. Obviously, you've seen more investors than I have, just by virtue of having taken the meetings. But I've certainly met some interesting people with interesting backgrounds, and certainly real money that I had never met before. And it's a sign of the times. Going back to the performance that we were talking about, the month of August saw a massive outperformance of gold equities relative to the gold commodity. That only happens when real new money comes into the space, either retail or institutional, but has to be new money to create that delta of outperformance. And I think what we saw in the market in August is being validated in person here at the conference.
Yeah, well, I think this was one of the first times since the sort of bull market in gold began that we started to see the GDXJ have kind of material inflows, or GDX, sorry, have material inflows. And so I think that's a great sign. And really the reality is that's where generalists go first, right? If you're a generalist fund, large scale, and you want gold exposure and you're underperforming because you don't have it, you're going to buy the GDX. It's an interesting event that occurs then, though, because the biggest components of the GDX all move, right? So you get like things like Newmont move or Agnico, and both those companies have actually performed pretty well. But also things like Barrick move, which has not performed as well. And so you get these. Sometimes you end up with a catch-up trade within that basket in the ETF, where you get those companies that have underperformed suddenly catch up because they're not getting inflows from specialist investors who are picking stocks, are getting inflows from generalists.
That's correct. It's the sign of the times and of the passive investment structure. But that also creates these locations, that we active investors can take advantage of. Both sides, things going higher and going lower. The fact that the money is spread out somewhat evenly according to market cap does create opportunities for us over time. I guess I'd like to touch on a few of the interesting themes that I've seen at the conference. And maybe picking up from what I said about some of the companies that are super well capitalized now, and I think there's an exciting space now. And you've heard us, the audience has heard us before talk about how the money trickles down from the producers to the junior producers to the advanced developers, and eventually later on to the explorers. Right now, I think we're sitting in a position where there are quite a large number of companies that have a resource, have a nice land package. They've never had the capital to turn the discovery into a 5 million ounce or a tier one. And now the market caps have re-rated to 100 million or more, so they can raise 20, 30, 40 million realistically, which they have done. And now they're going to do substantial amounts of work. And I think from here till next year, we may be in a position where if you pick your companies right, you may be able to get behind a company that has 1 million ounces. Is going to do a lot of work over the next 12 months. And this time next year, maybe you come here and it's actually a 5 million ounce that all the majors want to buy. I think that's a theme that I saw. There's quite a few companies in that space. And obviously, stock picker's paradise when you have like an opportunity set of 10 companies in that position and you're going to study them and bet on one or two of them.
Yeah, I think that's an interesting point. And obviously, we're going to Colorado Springs next week. And probably the theme there is going to be the ridiculous amounts of cash that the producers have on the balance sheet. And so, that's definitely something for us where you look at that and go, okay, well, we got all these producers generating cash. We haven't seen a lot, while we are seeing the money trickle down a little bit, we haven't seen really deep inflows into those developers or explorers. And so now you're right. What you would expect to see is the first kind of investor is the corporates.
Yep.
It was interesting. I obviously had a few meetings with corporates, and those are active conversations. There's definitely interest in new projects, new things, getting exposure to new companies, and that that's something that didn't surprise me. I was expecting it, but it's kind of the first time I got to see it firsthand.
Absolutely. I think this is a good segue into another subject, and this is something we've touched on before, something where we like to invest in, and it's the companies that are ascribed value for one part of their business but not for the other. Particularly in this case, I want to talk about the companies that have JVs with other companies but now have 100% owned exploration ground that they finally have budgets to explore properly. So whereas the market cap is typically tied to the JV and the value that's ascribed to it, most of these companies have zero value ascribed to the other exploration ground. And in some cases, they already have discoveries. And again, with these budgets that are available now for these types of companies, they're going to be able to deliver, good exploration results and hopefully a resource or a high-level discovery that could swap the value proposition where now the market cap is driven by the exploration ground, the 100% exploration ground, and the JV is actually the second part. And there's also a few companies like that, and I think for the next 12 months they're also in a pretty good position to, take advantage of that.
Well, I think that's that's probably a really niche way to look at it. But there's a lot of, we're seeing, we've looked at a few producers that are exploring and then have major discoveries on stuff not on their main assets. Again, that's a function of cash, and you could see that where you get this, all of a sudden that thing over here that you weren't paying attention to becomes valuable, and the market ascribes value. The market will ascribe value to it because you're advancing it or moving it ahead. And I think that's definitely a theme that is going to stand out. It'll probably stand out at Denver as well, because you'll have these large companies that now have massive cash balances, and so they'll be a lot more aggressive with their exploration programs. Yeah, I mean, as an example, Dundee Precious Metals had a big drill hole out of one of their development assets, right? And so you see that, that's an example of that idea. But I kind of want to go back to that point of companies, flipping over, right? Like, if you were running an Explorco 2 years ago, you didn't have any money. You were just getting by and getting there, and you might have done really good work, but you still got to. And now you've got capital, and capital's getting thrown at the space, and I think that the fact that capital's getting thrown at the space then means it doesn't necessarily mean that capital is going to be wisely spent. And so you still have to be, particularly as you get down to developers and exploricos, you still have to be very, very cognizant of what you're buying. Or is that money going to go into the ground? Is it going to be used wisely? Is it enough money to actually change the company and move it to that next level, right? Because it's, and what the plan is. And so that's why it's important to be at a conference like this, or listen. Precious Metal Summit's actually interesting. You can watch all the presentations. It's worth it to see what they're planning to do. It's not just a function of, hey, they got money and they're going to go drill holes and it's going to be great. What are they actually doing with it? Are they advancing the project in an effective manner?
I think to that point, and I think this is the overriding subject, right? Like, there's money available for drilling now.
Yeah.
It was very scarce for the last 5 or so years, or 10 years. Everybody was measuring, short budgets, 5,000 meters at the most. Now we're seeing companies drilling to 100,000 meters a year. That's producer type meters, and I think that's exciting, because from here till next year, we may see some pretty sizable discoveries. And in a bull market, a quality discovery, something that gets the attention of the majors, it will be richly rewarded. And we are in front of that opportunity set right now.
Yeah. And I think the gold price and that capital that's available, and even take us maybe a step further back, is can create fundamental change, right? So if this is one of the companies that we're looking at is a turnaround story, right? It's an operating mine. It's been struggling, and our experience is turnaround stories take several quarters to actually play out. But when you look at a turnaround story in the context of, $3,600 gold, they got a strong balance sheet, they have access to capital if they need it. If it stays down here, probably someone takes it out because of the relative valuations. Puts a lot of tailwinds into that turnaround story. It makes it a little bit easier for that management team to execute and deliver.
Absolutely. And to that story in particular, they're finally adding cash to the balance sheet, as opposed to spending cash from the balance sheet. They had to get ahead on development and typical things that happen when when the stars align in a negative way. Now they're in a position where they're actually going to start drilling again, and the resource grows. They continue to demonstrate continuity, and it will go from being a couple million ounces to north of 5, probably closer to 10. And that's a tier 1 asset in a tier 1 part of the world that's currently trading at a very depressed valuation, and the opportunity is just right in front of us. I've told this to a few people at the conference, it's amazing. We've seen these movies before.
Right.
I saw this with Westdome 10 years ago, for example. I've seen it with a few other companies.
I covered Lakeshore through their turnaround, right? The market, it may be faster because we are in a bull market, and so that recognition may come a little bit faster. But there is going to be it's going to take 1 or 2 quarters, right? Because in the process of, the reason you need to have a turnaround is you get burned. So we haven't mentioned the name because we're actually meeting with them in Denver, and we want to learn a little at the Denver Gold Forum, and we want to learn a little bit more about it. But I think at a show post this. Post both conferences, it'll be one of our ideas and one of the names that we've probably added to.
Yes. I guess it's also a good opportunity to talk about the key news flow that we've seen this week. There's quite a few. The most headline-grabbing one is the sale of Hemlo for quite substantial.
I don't think that's the most headline grabbing one. I think the most headline grabbing one is the Anglo Tech merger. But we can talk about both.
But, we're talking about like raising $1 billion for a non-producing entity
Raising
$1 billion to take over a mining asset. Obviously, I agree with you. The Tech and Anglo is obviously the Financial Times front page. But I think for our purposes here, raising $1 billion from a non-operating entity to take over an operating asset, I think that's quite special, and it demonstrates the amount of capital that's available in the space today, and the smart groups that are taking advantage of that.
Yeah, I haven't looked at the structure on the raise in detail. I think there's a lot of royalty money in there, and so it's something it is definitely not surprising, but we just kind of did say nice things about Barrick 30 seconds ago, but good on them. They waited for all Newmont's assets to sell, and that the consequence of that is that they got they weighted out the gold price and they got a much higher value than relative to what Newmont selling similar assets.
Also useful relative to our portfolio, and an episode that we made maybe 6 weeks ago that relates to Elemental and the tether backing. So we've seen another transaction involving Elemental, effectively just consolidating with the backing of this strong sponsor, and it's kind of playing out as we expected it to play.
The merging with EMX, yeah. After I think we talked about it in the last episode, but put up 80. No, they didn't talk about it in the last episode because it happened since then. Before they did announced the merger with EMX, they announced did an $80 million transaction on royalties and spent literally. I was talking I read it to David Baker, the CFO. So it spent every dollar in the treasury and on a line of credit to do that. You can only do that when you have, a de facto equity sort of equity backer who'll say, yeah, we'll if it goes sideways, we can take care of it, right?
Yeah.
Now they are generating capital, so it's a little bit different. It's not but that was positive. And then they announced the merger with EMX, and so, the involvement of what did they. What I think it was Tether who termed it the natural Bitcoin, was what they called gold. I think that overriding theme of that's very interesting is there. They've got a backer, and I think that's strong, and we're shareholders and happy about it. But I think that overriding theme of natural gold, and maybe that attracts with this significant crypto group out there pushing the gold narrative. Maybe that attracts another set of new investors into the space. And the reality is, in the mining space, in the cycle, and as the cycle progresses, what moves the needle on the cycle and what moves the needle for a lot of companies is generalist money coming in. It's not the dozen or so resource funds that exist around the world that have small inflows or whatever during the cycle or have really strong performance. It's people who are not in the space pushing money into it. Yeah. And I think that's sometimes why we get poor allocation of capital in the space when things are on fire.
Yeah, it's I get excited what you're saying.
Yeah. The other thing, I guess the other kind of theme, and not our favorite commodity to invest in, I think we've done 3 episodes on it, it seems to be silver. Seems to be a lot more silver companies. There seems to be a lot of money for silver companies. $40 silver, pretty much every silver company in the world works at that price. And so we're seeing a lot of new silver companies kind of come out of the woodwork to take advantage of the cycle. And obviously, having Uncle Eric contribute to their financings also helps as well.
Well, what can you say? He's been very vocal about silver, and he's been right. Yeah. So he's put his money where his mouth is. Yeah. He's probably the single largest backer of the silver stories, and kudos to that good investment. When you were talking there, I was just thinking, one of the most exciting things about coming to this conference is what happens on the Monday. So we had the previous Monday, Anglo and Tech. The market's going to close here in a couple hours on Friday. And typically before they open on the Monday, we get some interesting announcements. So Barrick just sold an asset. Could they announce that they're buying something?
Well, I guess maybe let's go back to Anglo Tech for food for thought, right? Both companies were up on the news. It's a relatively low break fee. The consensus, the some smart people that I've talked to, is that they basically just put themselves in play, and that I don't know if it happens this quickly, this Monday as being the day, but it wouldn't surprise me to see one of the large gold companies take a run at aside from the natural buyers of BHP, Rio.
Yeah. I mean, on the base metals, it's sort of diversified metals, there's like 5 potential buyers.
Right.
On the precious metal side, there's more than 5 potential buyers for these assets. And
Right.
the majority of them in the past have expressed a desire to get deeper and deeper into the copper market.
Particularly Barrick.
But I don't think it excludes any of the top 10 gold producers.
10 might be a stretch.
These
but yeah.
these are assets in some of the better jurisdictions in the world.
Yeah.
It's a well-known company, obviously. Most of the bankers are familiar with Teck, especially after the Glencore round. After Glencore couldn't take over the entire of Teck and took the coal assets, whichever banker didn't do the work on the copper,
Yeah.
on the remaining part of Teck, shouldn't have a job. I'm sure they all did, and they've been showing it around. So, it's a good point. Like maybe that's the headline, another bid. But I also think we may see, and this is pure speculation, obviously. There's a couple of 5 million ounce deposits out there, gold deposits out there, which is the sort of like the line over which these large caps would consider an acquisition. And some of them have not re-rated yet, as opposed to like we just saw, GDX was up 22% last month. So all of a sudden you have a little window where that 22% you just earned last month by virtue of the market, you can effectively pay it as a premium and effectively be no premium after the fact.
But I would even say, and the interesting part is that even some of those development assets that have re-rated, we own Troilus, which is, it's more than tripled this year, right? It's still cheap relative to where those producers are. And so there's certainly things like that, the opportunity. Be surprised if it was something like that. But I think that there is real possibility that you see, some kind of M&A like that. We could always see another merger of equals in the gold space to generate scale. But I think with the amount of balance sheet strength a lot of these companies have, I think that the more likely scenario is they're going looking at development assets or smaller assets.
And I think this is, I said this last year. 2 years ago at the show, I Am Gold was in a very difficult situation. They changed the management at the last minute. It was pretty complex. Stock went, if I remember correctly, it actually went under $1 or just over $1. Mm-hmm. And the expectation last year was, I Am Gold is up for sale. Yeah. Fast forward another 12 months, they're minting money. Mm-hmm. The stock has re-rated to a position where they actually can become a buyer. Yeah. And I think that's a good way of thinking about how we're going to go into next week, is even companies that were considered to be potential sellers or targets are now in a position to be buyers. So the buyer pool has dramatically increased over the last 12 months. And hence the opportunity for some announcements next week, hopefully.
Yeah, I think for us, so that's a great segue into what kind of think about or what we're looking for at the Denver Gold Forum. One of the key things that we do there, all of the majors present in a row. It's one of the few conferences out there where the CEOs present that the public has access to. I believe Denver Gold Forum does a live webcast, or you could watch the presentations after. And what do we look for, right? Last year, even up to last year, the gold price had moved a bit. Then everyone was talking about capital discipline. They were talking about buybacks, how much how low it was for them to discover ounces next to their own assets. Since then, several of them have bought things with the gold price move, and I think that it will be interesting to see how they talk about if that capital discipline shifts to a discussion about growth. And normally, what happens is with the large producers, they're really presenting what they're being told by their larger generalist investors. And so it'd be very interesting to see what the theme is coming from those companies. It wouldn't surprise me if there was a whole bunch of discussions on capital discipline and they bought something the next week. The only CEO that we've ever that I remember being so open about M&A was
I know who you're going to talk about.
was Clive Johnson from B2. So this was a couple years ago. He presents. He says, everyone else has got up and presented and said, like, it's called capital discipline. It costs us $4 an ounce to find things. Exactly what a generalist investor wants to hear. All about return on equity, et cetera. And Clive goes up there and goes, "Yeah, we're going to buy something." And lo and behold, a couple months later, they bought Sabina. And I think they were looking to reduce their jurisdictional risk, and so it was there. So I think it'll be interesting to see what some of these CEOs say.
I think a lot of people don't see the Denver Gold Show for all its benefits. And I was actually talking to Dan Dembo about this yesterday. And
just for reference, for those who don't know who Dan Dembo is, Dan was the former gold fund manager at USAA and has a long time in the space.
And he's a director.
And he's a director of the Denver Gold Forum. So,
think about if you had the opportunity to, say, go to New York and sit in front of all the largest capital allocators, the Apollos and the Blackstones and the sovereign wealth funds, and the CIOs would literally stand up for 15 minutes and tell you exactly what they're doing with their money. Wouldn't you want to be sitting there front row just listening and paying attention? In our case, the producers and the royalty companies are the largest capital allocators to our space. And we have the benefit every year to go to this conference and hear directly from them what they're thinking, how they see the market evolving, the industry evolving, what are they going to do with the cash, where they see opportunity. I think it's a very unique circumstance that you get to do this, and it's worth every minute that we're there.
Yeah, absolutely. And again, it's like this conference and like that conference. The other benefit is like how I like to describe it is serendipity. You spend time running through the traps and occasionally maybe have a drink at the bar, and you find out what someone is doing, or you run into someone who's got something new on the go, and maybe they're not presenting, and it's just an informal conversation about it. And it can be very value add, or you get an update from somebody that you haven't seen in a while, and that story has changed. So I think that's a great place to leave it off.
I say. We'll promise we'll bring some names.
Yeah,
for next episode.
So for the next episode, we'll talk about some of the ideas that we have coming out of both conferences and how we're sort of allocating a little bit of our capital and the success we've had recently. So, thank you everybody, and we'll see you in a week.